The opportunity for easy money is about to close in the crypto markets, but not before we get one last hurrah from this bull market in 2025. By now, your Bitcoin bag should be well locked and loaded. Buying at this point, probably not a fantastic idea, but there are still millions to be made from the altcoin markets, which are probably going to outperform until the end of the market cycle. The problem is there are thousands of coins out there in the wild, and instead of trying to catch them all, you need to focus on narratives and then look for coins within those narratives. Now, this video is going to be longer than usual because we have got a lot to unpack here. We're going to be covering some of the most popular narratives, the reasons why these narratives are big, and some of the popular coins within those narratives. So get your popcorn and drinks ready and stay with me until the very end as we explore 5 narratives that are going to be minting many a millionaire in 2025. Many believe, by the way, including me, that Bitcoin will go from, well, anywhere from 150K to sort of bearish case to 250K in the bull case this cycle. Alliance Bernstein thinks that as well. Even Charles Hoskinson from Cardano thinks we go between 250 and 500K. And if we look at the Fibonacci levels for Bitcoin, price discovery can take us up to around $250,000 to the 4.236 level, okay? That sounds nice, of course, if you've been stacking Bitcoin since the bottom of the bear market. If you bought heavily at maybe $20,000 or sometime in early 2023, then a 250K BTC, not bad, right? 10, 12x returns. But if you're just starting to stack your coins now at this level, you'll be lucky to get a 2x or, that'd be a great scenario. Maybe 2.53x, best possible case. Unless the USA starts really to buy a million Bitcoin, but even then it may not, there's no guarantees it's gonna send the price instantly to the moon. I'm afraid doubling your money on Bitcoin is the best you could probably hope for, a little bit more than that this cycle. But I know you wanna make life-changing gains the soonest time possible. Obviously, you didn't come here for a 2x, you came for a 20x. So instead of looking at Bitcoin, the fastest route to life-changing gains in the crypto space is with altcoins, obviously adjusted for risk. Don't get me wrong, Bitcoin will always be Bitcoin and should be part of any portfolio. It's my largest holding. In fact, I'm planning to sell basically all my altcoins at the end of the bull market, but I plan to keep the Bitcoin bag, okay? You gotta secure the Bitcoin bag, guys. I'll probably sell, I don't know, maybe a little bit if like the cycle goes totally nuts, up to 500K or something like that, even blowing my expectations out of the water. Like, yeah, okay, well, many times take them off the table. Then scoop up some retracement later on, okay? But that's a different story. Now, with that being said, historically speaking, after Bitcoin pumps big time, altcoins usually follow. Bitcoin moves to 100K, altcoins pump, Bitcoins move to 150K, altcoins pump, will Bitcoin consolidate, et cetera, et cetera. It's a general idea. If Bitcoin goes to 200K, there's a big chance that a lot of altcoins will do 10 or even 20x from these levels. And there'll be some surprise outliers that will give us the elusive 100x. In 2021, Bitcoin registered an increase of 59.8%, while other altcoins pumped much harder. For example, Ethereum holders got a 400% return. Solana holders got an 11,000% return. Even the failed Terra Luna project increased 13,000% before crashing to like literally zero. Dogecoin, 3,500%. Okay? Everything dramatically higher than Bitcoin in 2021. Now, before we dive into the video a bit more, I just wanted to make a quick note as well. We're going to mention a bunch of different coins in this video. No one's paid to be included in this video. The information that is in this video is provided to you for free for educational purposes. This is not a recommendation for you to go out and buy, sell, or hold any of the coins being discussed. You can take some of them as hints of things to go do your own research on, though. Right? I find these interesting. These coins, maybe you will too. Furthermore, I own some, but far from all the bags being discussed here today, okay? If you want to see my full portfolio disclosures, as always, there's a link down below in the YouTube description, the pinned comment over on X. Now, let us start with the narrative, which has minted probably the most millionaires this market cycle and undoubtedly mint many more millionaires in 2025. Meme coins. Love it or hate it, they make money, okay? And they're here to stay. Dogecoin was the OG, of course. It started as a joke back in 2013, but this joke has minted gargantuan amounts of money and many millionaires. In fact, it's estimated there are more than 2,100 addresses that hold more than $1 million in Dogecoin, and more than 470 hold more than $10 million. Now, we can argue that some individuals can own multiple wallets, but still, there are many people who have made life-changing money off of Dogecoin. We also have to remember that many of these millionaires, they bought their bags before Dogecoin ever even got to a penny. And with the current market cap of Dogecoin, I just want to say there's basically no real chance we're getting a 100x or even necessarily a 10x. Could be a bit of a stretch at this stage, unless Elon does some really crazy stuff and proposes, I don't know, US taxes can be paid in Dogecoin or something, or it's going to be the currency of Mars. Yeah, anyway, aside from that happening, Dogecoin's not going to go to those wild numbers. It's also been a good year for just meme coins more broadly, though, okay? According to the CoinGecko report, the top 10 largest crypto gainers of Q3 2024 were largely meme coins. Things like SPX 6900, GigaChad. SPX had a 600% almost return from July to September, while GigaChad had about 450%. In Q1 of 2024, we've also seen huge amount of meme coin interest. Again, average returns were around 1,300%, with things like Brett leading with a whopping 7,700% gains. Okay, so meme coins make money. But I know what you're thinking. That's all great, internet man, but which ones do I buy? Well, I cannot tell you which coins to buy. And again, none of the coins mentioned in this video are like your shopping list, okay? You need to still go do your own research, okay? But we can divide meme coins down by their risk-reward ratio. So you have to ask yourself, how much are you willing to risk? If you don't want to take a lot of risks, but still participate in the meme coin narrative, then you stick with those bigger market cap coins. Yeah, returns are going to be lower, but there's also not really a chance of getting rug pulled, which has some damn value to it. So, you know, stuff like Dogecoin or Pepe become interesting bets in that example. Or we have Base's Brett. It is a meme coin based on the character Brett from the Boys Club comic series. This is the same comic series where the Pepe meme coin comes from, by the way. Now, Brett already has a market cap in the billions, okay, at the time of recording this video. So maybe that 100x is pretty much out of the question, okay? However, 10x is crazy money, man, for a lot of people. Okay, and that's still possible. Besides, I believe the base ecosystem is still, even at this stage, pretty damn undervalued, especially compared to Solana, which has been getting all the love, and most Solana memes are way priced higher. So basically you got Ethereum meme, Dogecoin, Ethereum memes, highest market caps, Solana memes, highest market caps, then base memes after that. But that also means once base takes off, and it has been taking off, the memes in its ecosystem will have more tailwinds to push the prices higher. And speaking of Solana, by the way, Dog with Hat has been in the news recently. We have Robinhood and Coinbase listings that are happening, and Robinhood alone has been a major gateway platform for a huge amount of new people coming into the cryptocurrency space. The fact that they're listing Dog with Hat feels important. And WIF being listed on Robinhood means that another 24 million potential people who can buy WIF. They're coming to buy your bags, guys. Just like Brett, this is already considered to be a high market cap coin. So again, don't go expecting 100x off of your Dog with Hat backs, or even a 50x is probably pretty absurd. At the current about $3 billion market cap at the time of recording this video, maybe a 5 to 10x is a much more realistic target, which is pretty good still. Come on. But I just have to remind you, the targets are just targets. We're sharing price ideas and stuff like that just as a sort of general guidepost. There's no assurance that's what's going to happen. I'm just thinking out loud here. And for those of you who think that a 5x is too small for a meme coin, but you don't want to take huge amounts of risk, well, you can start looking for those smaller market cap coins that have had an initial major pump and then they're still here. They found a cult. They're surviving. They're small enough that a 20x or even maybe as much as 100x is still in theory possible, but not too small to the 13-year-old's going to easily rug pull it. That literally happened to a coin, by the way. So something like the Church of the Smoking Chicken Fish could fit the bill pretty nicely. It has a small enough market cap, whereas 20, 30 billion, 40 billion, something like that, time of recording this video, time you watch it, who knows, but this means its market cap only needs to go, to $1 billion for a 30x move, 3 billion for a 100x move, which feels more possible when investing in a meme at that kind of market cap. In a full-blown altcoin season, $3 billion isn't really that crazy. Also, if I'm buying a token solely based off if it makes me laugh or not, but most meme coins are lame as fuck. Most meme coins are super lame, okay? Try not to swear in the video, Lark. But this one actually makes me laugh, okay? I know people love dogs and cats and frogs, but smoking chicken fish is a nicotine-addicted fish stuffed in a chicken, man. That's great. Sort of like some cool mutant turducken here thing. Anyway, not exactly cute, but hilarious, and it kind of looks Gemma Stone. Anyway, let us not forget, not all meme coins can brag that they are a real church that is registered with the IRS. This one actually can. It's a real cult, I guess. Smoking Chicken has also a lot of big followers. BitMEXC's Arthur Hayes, Real Vision's Raoul Pal, you know, a lot of people excited about the smoking chicken fish, right? Hayes even said that's the only meme coin in his portfolio. Don't know if that's changed since then, but still pretty noteworthy. Now, there's some other ones in this category that I think are pretty noteworthy, especially in the base chain. So we have stuff like Basenji or the Benji token. So if Doge is the OG of all meme coins, then Basenji is the OG of all dogs. It is said to be the dog of the Egyptian pharaohs. Now, unless you find the original dog that boarded Noah's Ark, I don't think you can get much more OG than that, okay? And just like Brett, again, this is a meme coin on base, okay? So the base ecosystem probably set for massive repricing more broadly, and memes there could benefit from that. Still, the base thesis is in effect, okay? Other notable base memes, we have Mr. Miggles, that ugly cat, probably gonna get a Coinbase listing at some point, just speculation, I have no idea. For sure. We have Ski Mask Dog, which has been really taken off and getting a lot of popularity. Some big accounts have been talking about it. People are getting excited about it. Now, if those types of returns are still no good and you have that cash burning in your pocket and just have to go gamble on the tiny micro caps, if it's over a $10,000 market cap, it's too big for you. Okay. Going that route is like playing the slot machine. You're going to lose 99.99% of the time. You can bet 1,000 spins and still lose, and a lot of people do. Very, very, very few people make money in the sort of the meme coin trenches. The odds are heavily stacked against you for a variety of reasons. People with more technical knowledge, insiders, all the BS. Now, according to a CoinGecko report, 50% of cryptocurrencies have died since 2014, but it's actually much larger than that because most of the other ones are actually just zombies, are completely just dead, but still have trading volume somewhere for some reason. And I bet two Shiba Inus that a big part of those dead coins are already meme coins. In fact, it's gotten crazier since then. There's about 50,000 new memes a day approximately that launch across the crypto space, maybe 10 a week, survive for more than a few hours and go on to get like $1 million plus market cap, and maybe one per week actually takes off. The odds are heavily against you. But a lot of daredevils have made a lot of money by getting in the trenches. For example, if you bought the Hedgehog meme coin Shrub about 3 months ago, you would have made a 200,000% return by now. But you might say, I know it's a gamble, Lark, but is there any way to make the odds better? Well, look, this is not a silver bullet, but what you want to look for is, again, the cult-like communities. People actually out there working for their bags, hustling, rating posts, stuff like that. And probably stay more away from the more VC-backed meme coins, which there are a few of those out there. And if there are big investors behind the meme coin, then chances are, of course, that the majority of the supply has already been pre-allocated out to early investors and to developers, which is fine, and that can work out really well sometimes, but it's not necessarily the full ethos of what we look for when we look at meme coins. Fair launch projects, which nothing's totally a fair launch. Team always keeps some, snipers always get some, there's always some BS, okay? But you have a fairer chance of getting tokens at the same time, in theory. Also, having a cult-like community is good because then there's a bunch of unpaid ambassadors out there working for free, promoting their bags, essentially, and will do so with so much enthusiasm because they themselves hold the coins and they want to get rich. Having skin in the game is really the ultimate form of motivation at the end of the day. Now, before we move on to the second narrative, and this is a really big narrative, probably the biggest even beyond meme coins, it certainly has more staying power and functionality, I want to take a quick minute to talk about how you can get 100 million Pepe coins. You see, the guys over at BitUnix have an insane offer on right now. Now, BitUnix, in case you don't know, is a KYC-free exchange with hundreds of hot coins and very deep liquidity across all the majors. You can trade all the top stuff there, your Bitcoin, your Ethereum, your Solana, and hot new meme coins they listed too. And now you can get an insane 20% deposit rebate. So, for example, you deposit $1,000, you get $200 back. That's nuts. And for the top traders, you can snag yourself an insanely large bag of Pepe, 100 million Pepe coins. That's bonkers, man. Use the link down below, get started now, make your deposit, start trading, have fun. These insane bonuses, by the way, are a limited time offer, so go get it. Now, the second narrative, artificial intelligence. AI is coming for you. There was a time when AI was just something that we watched in sci-fi movies. You know, watch The Matrix or Marvel or whatever, man, Iron Man's Jarvis or whatever. You know, all this stuff seemed cool, but so distant. Well, everything's changed pretty big time in the past year and a half. It's here, AI is here, and it's only getting crazier. AI is undoubtedly the biggest catalyst for the tech boom of 2023. The biggest companies like Meta, Amazon, Google, Nvidia investing billions into the new narrative. And of course, that new trend made Nvidia a household name because of its incredibly phenomenal growth. It had a 239% growth in 2023 alone. In fact, over the last 10 years, it's performed basically as well as Bitcoin, which is crazy. The company had more than $360 billion in market cap in 2022, but that ballooned into more than $1 trillion in 2023, and today it's around $3.3 trillion juggernaut, which is the size of the entire crypto industry in just one company. So if you had bought Nvidia shares in 2022, you would have made a 10x by now, which by all means is like fantastic returns for the stock world for sure. It's like almost crypto level returns. And what is more astounding is just how quickly artificial intelligence has become so mainstream. Today, everybody who has access to the internet knows what ChatGPT is. But did you know that it only took 5 days for ChatGPT to reach the 1 million user mark, one of the fastest apps of all time? For comparison, it took Facebook 10 months to reach that same number, which is crazy. AI has become such an important part of our daily routine, our daily lives, our daily workflow, that it is estimated that artificial intelligence is going to contribute more than $15 trillion to the world economy by 2030. With those numbers, if AI was a country, it would be the third largest economy in terms of GDP, just behind China. So kind of a big damn deal, right? And right now, we can buy stocks of companies that are into AI, like Nvidia, like AMD, like Meta, Microsoft, blah, 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 right? But since we're into crypto, and you're watching a cryptocurrency video, why not double down on the crypto niche and go with AI crypto coins? And to be honest, it is of course riskier, right? But the returns will probably be bigger, and that's the point. One of the biggest investment firms, Van Eck, they actually released a report recently that by 2030, cryptocurrency AI will be generating more than $10 billion in revenue on a base case scenario. But I have a feeling that the bullish case here, the bullish case scenario, will be even higher than this because it's moving so fast right now. And AI, of course, is one of the most undervalued narratives with a market cap of just around $40 billion at the time of recording this video, which is 3x smaller than the market cap of frickin' Memecoins, man, despite the fact that they are both dominating the cryptocurrency narrative mindshare. In fact, the AI mindshare is often much higher than memes, which is crazy considering the market cap is 3x lower. You just have to look at what's being built behind the scenes here to recognize that the convergence of AI in crypto is a big deal, and it's only going to get bigger. A lot of people treat them separately, like AI is just for helping us with tasks like research or creating some kind of images, and that crypto is just for gambling on meme coins and making money. But it's actually not the case. Crypto is the value layer of the internet, but it's also the verification layer of the internet. And it's the decentralization layer of the internet, and it's the truth layer of the internet. And that might sound a bit harsh, of course, to crypto to say it's just about making money, but it is kind of true sometimes that people think like that. And few realize, of course, that AI and crypto are actually the perfect match. Let me ask you a question. Did you know that the biggest AI models are owned and controlled by big, powerful companies? So what's stopping them from taking your data and using them for whatever they want? Literally nothing. Did you even get compensation for all of that data? Of course you didn't. Right? Big, fat no, obviously. These are major challenges, of course, that are facing the AI industry right now, plus massive censorship from big tech and them doing silly woke BS. It's a problem. So how do you make data more secure? And how do you help compensate people that are helping to train the AI models? All right, I know some of you might have some questions. I mean, why the hell will you get compensated for using an AI, right? Well, you are the user after all, so it should be the other way around. Well, it is because artificial intelligence models are actually being trained, and for them to be trained, they need data. You are the ones giving the data when you use them. I know, it's crazy, right? And it's improving all the time because it's feeding off of your data. You're feeding the beast. All sounds familiar, of course, if you have seen the Matrix movie trilogy. So how does crypto actually help here? Well, for one, again, it helps to secure our data. Public blockchains are transparent, which of course allows for stakeholders to be able to verify all of the information. Blockchain's also very hard to tamper with, which makes it trustworthy. Blockchain's distributed nature reduces the power of big corporations that have total control over AI. If you think one company having total control over an AI model is no big deal, think again, because a lot of people are relying on artificial intelligence right now for information, and a lot think that they don't make mistakes, but they do make mistakes, okay? Earlier this year, there was drama with an AI model because it portrayed the founding fathers of America incorrectly, just putting it lightly. Just imagine what if a specific AI is trained to answer according to, well, a company's politics or a company's desires in the world. That could then influence the course of a country. There's a lot of danger here with who controls the algorithms, which is why we need decentralized algorithms, okay? Decentralization solves a lot of the problems of AI. Aside from protecting the trustworthiness of information, crypto can also solve the issue of compensation, make sure AI models stay truly decentralized and permissionless and neutral. Those who can help train AI models can also be rewarded with a project's token, making it all a win-win situation, okay? Better AI, better future, better for people, it's all great. Now, there are many projects working in the AI space, and we could probably spend hours just making a video on that exact topic. But if you want some of the safer ones, we have stuff like BitTensor and Render. Now, when you see a project already in the billions of dollar market cap, then chances of it going to zero are pretty strongly reduced. I'm not saying it can't, Terra Luna, but you know, a lot less likely. BitTensor, for example, is a massive decentralized machine learning network where participants or miners can contribute their AI models and their algorithms. Now, in essence, these participants share their models with the network, allowing them to be able to train and to improve collectively. Models that provide valuable insights are then rewarded with Tau tokens. So much like Bitcoin, BitTensor is open to anybody who wants to use it or to contribute into the network. But the similarities don't end there. Both have a supply limit of 21 million tokens and follow a schedule of halvings. Additionally, BitTensor's white paper draws significant inspiration from Bitcoin's format and style. In many ways, BitTensor can be seen as Bitcoin's cousin, but with a focus on AI. Pretty cool, right? And with the current market cap, again, don't expect 100x coming from BitTensor. At least not this cycle, okay? Maybe a 10x? Yeah, it's realistic. Like BitTensor, Render is also a multi-billion-dollar crypto AI project. It's not specifically AI, it's decentralized computing. I know, most of that's used for AI, okay? Now, we've discussed that NVIDIA is the biggest winner in the advent of the AI revolution, right? Its market cap shot up because the GPUs it produces are needed to power the AI models. We think of AIs as apps or programs, but behind each AI model is a network of GPUs. Here's the problem. GPUs are pretty damn expensive, okay? So it's pretty hard for small developers to be able to buy and maintain their own network of GPUs. Even for bigger companies might have a big project and they just need more power and they don't want to go out and spend $1 million to buy GPUs when they could just rent it for a week. Render democratizes the GPU market, which is not an original idea. We've seen that quite a few times in crypto, but these guys are winning on the implementation of the idea. Render provides GPU on demand. It connects node operators who are willing to rent out their idle GPU computing power through a decentralized peer-to-peer network. Yeah, I know, the Uber of everything, but it's kind of like the Uber of GPUs, okay? And it's the Uber GPUs, guys. Computing power is what's being shared instead of cars. So instead of money, transactions get settled in RNDR tokens. Pretty cool idea. Now, another promising AI crypto project is Zero G Labs, the first decentralized AI operating system. Now, to be clear, the token for this one at the time we were recording the video has not hit the market yet. So keep an eye out for this one, still early. Centralized AI often sells or misuses personal data. Users who provide data rarely receive rewards for their contributions, while centralized AI companies make all the ka-ching, right? With 0G, participants can actually participate. They store and manage data on chain through a decentralized storage network, which of course ensures full data availability and enables then verifiable and transparent AI modeling. At the same time, okay, it can make sure that users are actually compensated fairly. It's also super fast, by the way. It's 50,000 times faster than the competition, while being 100 times cheaper. That's crazy, man. Another privacy-centric project is Nillion. This is humanity's first blind computer. Also, the token for this one at the time of recording is not trading yet. We're just highlighting some of the hot new tech that's coming out to the crypto space here. Now, did you know that in 2024, over 1 billion records were stolen, and the numbers are only going to keep on rising, okay? Data breaches and stuff like this are just exploding. Both Nillion data breaches could be a thing of the past. You see, Nillion utilizes a decentralized network of nodes in order to help perform blind computation, okay? Now this means that it can process information without seeing or revealing the data itself. The data is actually made unrecognizable, split into smaller pieces, and then sent off to different nodes for processing. So if one of the nodes gets compromised, well, there's just no way that the data there can be traced back to the owner or even made sense of. It's just got little fragments of it. Now, how does this tie up with AI? Well, personalized AI will soon be as common as having a smartphone, AI household robots, all this kind of stuff. But for these AIs to work properly, they need to know your most intimate secrets. The things you watch late at night, for example, or your deepest, darkest desires. Chocolate cake. You know, you guys know the stuff I'm talking about. Luckily, with blind computation, these AI companions will be able to process your data without compromising your privacy, which, not just for silly stuff, guys, but you should have privacy for everything. How you spend your time, your money, the things you think should be private when you want it to be. Now, our next project is Near Protocol, which is not exactly a new AI project, but this layer one chain is calling itself the blockchain of AI, and the developers they walk the walk, okay? Ethereum and Solana are our go-to chains for creating applications on top of, right? But these two are more all-purpose platforms. However, they're not specialized for AI, and this is important. Now, one analogy we can use is with doctors. If you need brain surgery, hope you don't need brain surgery. If you need brain surgery, you're gonna go to a brain surgeon instead of going to a foot doctor, right? Yeah. Right now, Near is planning to build the world's largest 1.4 trillion parameter open source AI model, which is 3.5 times larger than Meta's open source Llama model. Think about that. A decentralized blockchain network is building an AI model 3.5 times larger than Meta's Llama model. Yeah, come on. Being open source, it encourages, of course, community participation, and funding is even being sourced with sales. So something to pay attention to. Now, that's narrative number 2. Let's move on to narrative number 3. Okay, still with me? I hope so. This video is packed with information. Now, moving on. How can we forget about layer 1 blockchains? Without layer 1 blockchains, there is no crypto. It is the foundation of the cryptocurrency industry, and it's the place where applications and even sometimes other blockchains get built. Think of it as the land where the buildings are made, okay? The buildings are the layer 2s, they're the rooms inside, the dApps and all that kind of stuff, right? Bitcoin, of course, is the OG layer 1 blockchain, but it lacks a lot of functionality. Ethereum, smart contract blockchain. Solana, smart contract blockchain. BNB, smart contract blockchain. If you have Bitcoin, the other big layer 1s, then chances are you'll do fine because they always survive and do well in the cycles. However, there are some smaller market cap ones, not tiny market cap, we're talking $1 billion here, that should probably be on your radar, okay? Take, for example, Sui. Launched back in May 23, it quickly gained 1 million active users by July 23, and as of September 24, has surpassed 18 freaking million users and 4.52 billion transactions. DEX volumes and stuff crazy. It's been doing pretty good. It's fair to say that's one of the fastest growing layer 1s across a variety of metrics. So what's so special about it? Well, Sui uses an object-centric data model, directly linking asset ownership over to user accounts. Now, this design allows for faster transaction processing and for higher volume handling because essentially it simplifies the tracking of ownership, okay? Now, in contrast, Ethereum's account-based system tracks ownership separately, okay? Requiring more steps and more calculations, which of course can slow down and does slow down transaction processing and thus reduces the number of transactions that it can handle at any one time, thus resulting in much higher transaction fees as more people want to do transactions at the same time and are willing to pay higher prices for it. It's a real problem on Ethereum. Essentially, Sui's approach enables quicker and more efficient transaction finality compared to the Ethereum network. In tests, Sui achieved up to 297,000 transactions per second with a finality of 390 freaking milliseconds. Compare that, for example, with Ethereum's 15 transactions per second, or even Solana's 1,500 transactions per second. But you have to keep it fair. Solana's Fire Dancer's coming, and it could be 1 million transactions per second, but still. Even Ethereum 2.0's expected speed is 100,000 transactions per second, and that accounts for all the layer 2 stuff going on, which is messy and dislocated and all that kind of stuff. Kind of feels like a race between the rabbit and the turtle sometime. Now, another layer 1 that we shouldn't fade is Aptos. Now, fun fact, Sui and Aptos are like brothers, but from different mothers, right? Aptos and Sui both have roots in Meta's discontinued Diem project. Yeah, Meta was going to launch a blockchain before the SEC shut it down. When Diem was shut down, former team members from the project decided to continue their work, but independently, leading, of course, to the creation of these blockchains. I know their origins are, a little bit cringy, Facebook, Mark Zuckerberg, anyway, whatever. But you have to give it to the developers to make something better than what Facebook, of course, had in mind. We're just making jokes here, of course, guys. I got a big Aptos bag. I'm sure it's going to do fantastic. Now, you might ask, what sets this apart from other layer 1s? And I can tell you that its goal is to provide universal and fair access to decentralized assets for billions of people, or it's scalable, it's secure, it's developer friendly, okay? I know you've probably heard all of that before. It's like the pitch for every blockchain. But there is no denying that Sui and Aptos, they leave the competition in a lot of ways in the dust when it comes to transaction speed, which is clocked in at 160,000 transactions per second. Huge growing total value locked in terms of stable coins, huge growing user base, transactions are up, DEX volumes are up, all that kind of stuff. It's moving. And as for the use case, just recently the investment management company Franklin Templeton, with over $1.53 trillion in assets under management, has announced that they are integrating with Franklin Templeton's on-chain U.S. government monetary fund with the Aptos blockchain, okay? So that's pretty cool. As for the numbers, in just 2 years, Aptos has achieved several pretty big milestones, including having 27.7 million all-time active addresses, 1.7 billion all-time transactions. Again, at the time of recording, these numbers will be bigger by the time you actually listen to this. 326 million transactions even happening in one single day, by the way. Now, for comparison, Ethereum has about more than 1 million transactions per day, with the highest number of ever recorded transactions in a day, around 2 million transactions, which is sort of the technical limits of Ethereum back in January 24. I mean, not bad for a blockchain that was launched, more than 2 years ago, right? Aptos is doing pretty damn well by comparison. So there's that to keep in mind. But a lot of projects have simply gone to the graveyard after promising us the moon and the stars for years. And this is something that we have to be wary of when dealing with older projects. A lot of these hot new things, Sui and Aptos, are the shiny new coins of the cycle. But some are worth paying attention to that are older coins too, things like Avalanche or Phantom. Despite being launched in 2018, Phantom is continuing to evolve and surprise us. They're still here. And why am I interested in this old geezer dino coin here? It's rebranding with new tech. Not just rebranding, but it's having a major tech upgrade along with rebrand. People like new and shiny things, and Phantom will soon launch a Sonic, which is a new shiny thing. And it's not just a marketing stunt where you change the name, you still have the same old crappy stuff. A lot of coins try to do that in crypto, okay? Don't buy that bullshit. The Sonic upgrade is actually a major upgrade, and that's why they're renaming blockchain. It's essentially a whole new start in terms of massive tech. It's going to greatly increase the transaction speed from the current level. And admittedly, Sonic's speed of 2,000 transactions per second, much faster than Ethereum, but still not as fast as Aptos or Sui, but this is just early iterations of Sonic, and we're looking at potentially even 10,000 or more transactions per second. However, the narrative of the new chain, definitely something to watch out for. The news that Sonic has just completed its snapshot for the airdrop, created the Genesis block for the new chain, has already had a positive effect on Phantom's price over the recent weeks. Another layer one that probably shouldn't be faded is the Avalanche network. Got a big bag AVAX. Bullish on a lot of things to do him. Again, not exactly new, but still evolving, okay? We're gonna talk about some ones that are not getting a lot of attention here in a minute, but the AVAX ecosystem, very interesting since developers are continuously building on top of it. Lots of cool stuff launching over there, like the Battle Royale game Off the Grid, okay? That's built on top of Avalanche. It's really cool. It's an amazing looking game. On-chain, insane. The gaming sector is set to expand in the years to come, and Avalanche, of course, is proving that it's a good platform for game development. Look, we all know that the biggest gains in any cycle can be had with culture coins, or, you know, the meme coins, if you will. And this makes it pretty attractive, of course, to a lot of gamblers, investors, you know. Look, the good news is that stuff like the Avalanche chain, they have the Avalanche Foundation, and the Avalanche Foundation launched actually a $100 million culture catalyst fund. They're true culture connoisseurs, and they were using that to recognize and encourage the culture and fun symbolized by meme coins, aka they're spending $100 million bucks, or have been spending $100 million to buy meme coins on AVAX, which is pretty cool. If that is not enough of a reason to consider Avalanche, it's pretty cool, by the way, then this might change your mind as well. Citibank, one of the largest banks in the world, you've probably heard of them before, is exploring the tokenization of all kinds of stuff using Avalanche's Spruce subnet framework, a subnet which is designed for institutional blockchain deployment. And if that's still not enough, we got more. We actually got lots more. We're not even going to cover in this video. AVAX is a very bullish asset. But anyway, Avalanche will have its biggest upgrade yet, called Avalanche 9000. Again, rebrands and upgrades, when they're backed up by real substance, are things that you should keep your eye on in the cryptocurrency market. Now, before we jump to the next narrative, I just want to remind you, of course, that there are coins that, well, you might want to think twice before adding them to be part of your portfolio. These sort of dino coins will sooner or later be part of the statistics that say 50% of all cryptocurrencies have essentially died, okay? They belong to the Smithsonian, Memories of Crypto Eras Bygone, okay? Take, for example, NEO. I know it's still surprisingly high in the market cap. It was launched in 2014, rebranded in 2017 from Ant Shares to NEO, and once upon a time, it was the Ethereum killer. Back in 2017, it was gonna flip ETH, and it was like, it was the coin, man. But it probably fell on its sword somewhere along the way in 2018 and just never managed to get enough catalyst going to be able to make it into the 2021 cycle and really catch us excitement and bid. It used to be one of the top 10 coins, but right now it's not even part of the top 100. Another so-called Ethereum killer is EOS. Remember, it was 2018. It was the fifth largest coin with more than $11 billion in market cap. It's a great run on EOS. Made a lot of money on that one. But it's also going the way of the dinosaur. No one talks about EOS. No one gives a crap about EOS. Still in the top 100 for some reason, but it's been a rough ride, man. I don't hear anybody talk about EOS anymore. Remember, if it's old news and it's not being talked about, then it's probably best to stay away from it. Just like your ex, right? Anyway, for real though. Money flows where attention goes. And if attention's not going to your blockchain, I got bad news for you. The money ain't going to flow there. Hey, real quick before we get into the next thing here, I want to take a quick second to let you know what the Wealth Master Newsletter. By the way, congratulations if you're still along. This video is super information-packed and really dense, so I hope you're enjoying it. But anyway, we got this thing called the Wealth Master Newsletter. It's your weekly guide to the cryptocurrency markets. Our readers love it. I'm sure you will too. And here's the reason why. See, every week, my team of researchers and I, we're helping you not just to stay ahead of the curve, but also to save your time by finding you the latest and greatest insights from right across the crypto space. Altcoin alpha, altcoin deep dives, meme coins, AI stuff, DeFi, airdrops, charts, technical analysis, much, much more. Join our 150,000 plus weekly readers for free Link down below in the description or the pinned comment over on X. Go check it out. Okay, so the next segment, BlackRock. Got to talk about BlackRock because they're bullish on something that's going to be really big. See, BlackRock is instrumental in the approval of the Bitcoin ETF, and it can't be denied that its Bitcoin buying spree is one of the reasons why we are currently enjoying the kind of bull market that we are enjoying. Larry Fink, the Bitcoin bull, who would have ever guessed it? But there's one crypto narrative that also gets a lot of love from that probably $11, $12 trillion asset manager. I was going to say 10, but gosh, BlackRock's so big anyway. And that's real world assets, or RWA. See, BlackRock's CEO, Larry Fink, the master of the universe, even said that tokenization will be the next generation of the crypto markets, really all markets in general, actually. Stock markets are all coming on chain. In case you haven't been following, real world assets refers to assets like real estate, commodities like gold or oil, even art, stuff like that that can be tokenized and brought onto the blockchain. Okay? Stocks, all kinds of stuff, guys. Anything from the real world that can be brought in, digitized, and then be used for trading or taking loans against and all that kind of stuff. This allows physical assets to be traded, owned, and managed digitally, removing a lot of the middlemen and fees and making the velocity of all this stuff much faster, providing greater liquidity and more accessibility globally. Now, as you can imagine, we can tokenize basically everything of value. This is so promising that it's estimated that real-world assets will be worth more than $4 trillion and up to as much as $30 trillion by 2030, representing a potential 50x growth from the current levels. Now, to give us a clearer view of how this works, let's take gold as an example. Now, gold has long been a store of value. However, it's hard to store, it's hard to sell, it's hard to transport. Now, OG real-world asset coin, Paxos Gold, or Pax Gold, solves this. It's an asset-backed token where one token represents 1 ounce of gold. So instead of worrying about how to carry like a kilo of gold around in your pocket, which is pretty inconvenient, you just have to have proof of ownership via a token. Pretty neat, right? Best of all, you can buy and sell it anytime on exchange and get your money's worth out of it. No having to pay huge premiums like you would with buying physical gold. But of course, Paxos Gold won't give you a 10x or even 2x anytime soon since it's pegged to the price of gold, all right? Since we have already mentioned BlackRock, let's take a look at the Ondo Finance, which is actually closely linked to BlackRock, by the way. Now, this is because Ondo actively integrates with BlackRock's BUIDL, or BUIDL, or USD Institutional Digital Liquidity Fund, okay? Just tokenized treasury products, so bringing US treasuries on chain, allowing users essentially to move assets onto BlackRock's platform through Ondo's system and invest in US treasuries. But what exactly is Ondo Finance? Well, launched back in 2021, this is a DeFi platform that aims to be able to bridge traditional finance with blockchain technology. I know, right? Of course. And it focuses on creating institutional grade financial products, which is exactly why BlackRock is working with them. Now, as an RWA project allows physical assets like real estate and commodities to be able to be represented digitally on-chain. With a $2.3 billion market cap at the time of recording this video, I want to say that 100x is really not likely to happen this cycle, but with partnerships with big players like BlackRock, then it might perform better than you expect. And I've been proven wrong before. Maybe it'll happen again. Whatever happens, I believe this project has got some interesting upside potential because of the narrative and the connections. Another RWA example is Red Belly Network, which at the time of recording has not actually launched its assets yet. And it's the first formally verified blockchain developed at the University of Sydney with CSIRO, which is an Australian government agency responsible for scientific research and commercial applications. Now, this is an EVM compatible blockchain, which means it's compatible with Ethereum virtual machine network So Ethereum layer 2s, Avalanche, stuff like that. It offers instant finality, zero transaction loss, and achieves lab-proven speeds of 660,000 transactions per second with 10,000 transactions per second under real-world dApp workloads. As for utility, it has already partnered up with Hutley, which is an Australian digital asset platform, in order to tokenize $1.8 billion in rent rolls. Now, in total, they have about 70 billion plus coming on chain already lined up. So on day one, they're out there with $70 billion of real world assets on chain, making them immediately one of the biggest by TVL in the crypto. Now, it's a big step, of course, towards on-chain asset management, which can pave the way to digitize the $10 trillion Australian real estate market, which is still based largely on paper. Now, our last example for RWAs is Lumia, another platform specifically designed for real-world assets, just like Redbelly. But Lumia describes itself as the only full-cycle RWA chain. Now, if you're scratching your head here trying to figure out, what the heck does that mean, Lark? It's a great question. Well, it means that Lumia handles the real-world assets from the start all the way back to the finish. Yeah, I know it's still a little vague, but here is an example so we can break it down so you can understand this. First, imagine you have a piece of real estate. Let's take a house, okay? You got a house. Lumia can actually tokenize this house, turning it for you into a digital token on the blockchain in a process that it calls asset tokenization. Next, if these tokens need to be traded, well, guess what? Lumia actually then connects these tokens to various exchanges, both centralized, of course, and decentralized. Now, this second step is called liquidity bridging. So as you can imagine, this makes the actual buying and selling as easy as it should be, and as easy as trading coins or trading stocks that you're used to. Now, Lumia can also integrate these tokens into the decentralized finance world. So now you're starting to see, right, where this is all going. So this means that you can mint your house token, bring it over, trade against it, for example, or use it to get a loan, right? You don't have to go to the bank. You can just do it via a smart contract. You can use your tokens to get a loan from DeFi, completely removing banks. You're just using software to do it. It's pretty crazy, right? It works the same way as using your house for a mortgage, or a reverse mortgage, I guess. But this time it's all digital and it's all on chain. And I'm pretty sure in the near future it's probably going to be the standard way things are done. People will look at it as quaint and old fashioned. We used to have to go to banks and sign a big pile of papers and bullshit like that. So look, for projects like these, if you want to position your portfolio for what is coming, then keep an eye on some of these real world asset players. All work and no play make Jack a dull boy. At least that's what my parents would tell me when I was caught playing instead of doing my chores. There's a lot of firewood I had to carry. Anyway, gaming is something that resonates with a lot of people. For many, it's an escape of some sort from the craziness of the real world. There are approximately 3.2 billion gamers worldwide, which is 40% of the 8.1 billion people in the world. And there's a lot of babies and old people and, get some uncontacted tribes in Brazil or whatever. So, a lot of people playing games. Now, the number tells us that gaming is a big lucrative niche. It's so lucrative that the industry's 2024 revenue is estimated to be $455 billion. And it's no wonder that crypto has a narrative solely focused, of course, on gaming. Gaming has come a long way, especially in crypto. But let's backtrack a bit here. How'd we get here? In 1958, the game Tennis for Two was introduced and is acknowledged as the first ever video game. In 1972, the Magnavox Odyssey was released and is considered to be the first ever gaming console. It was followed by Atari in 1977, and then the Nintendo Entertainment System, or NES, in 1985. Good year. Sony entered the gaming console market in 1994 with the first PlayStation. I remember that. It's a good time. Well, Microsoft Xbox was released in 2001. By the way, Resident Evil 1 on PlayStation 1, classic, man. Classic. Anyway, games also evolved with the mass adoption of the internet and mobile devices, which was how we got to billions of people playing games because everybody can just play on their phone now, right? For those old enough to remember, you might play something like Snake on your Nokia 6610, right? Now, games are a lot better, right? Now, the rise of app stores led to the development of free-to-play games, stuff like Angry Birds, The free-to-play mobile strategy game Clash of Clans was also very, very popular when it was launched back in 2012. And we've had so many iterations of stuff, Candy Crush and Pokemon Go and all these sort of games that just take a lot of people's attention. And of course, how can we forget Fortnite and all this stuff? And then crypto comes along and starts getting into gaming. We have stuff like CryptoKitties, which launched back in 2017, making it the first blockchain game ever, which was terrible as a game, but great as a first entry into blockchain gaming. By 2022, the blockchain gaming market was estimated to be $128 billion, according to Fortune Business Insights. It's projected to grow to $614 billion between 2023 and 2030. Now, this gives us a compound annual growth rate, or CAGR, of 21.8%. Crypto, of course, has disrupted gaming in a very big way with the introduction of play-to-earn gaming, and later on, the play-to-earn models, which are really the complete opposite of pay-to-play models for a lot of gaming companies, is something that is changing the narrative. You have NFTs, you can earn tokens in game and all that kind of stuff. And on the last cycle, we saw how crazy crypto gaming got. It's popular. It makes sense. It makes as much sense as Memecoins to me. I like the game. I buy the token. It's that simple. Axie Infinity was very popular because it made gamers millionaires. They became rich not by trading tokens, but by playing the game. For example, there's a Filipino guy named Aaron Ramos who was able to buy 2 houses by playing Axie Infinity. Stupid. It's crazy. Good job, Aaron. That rocks, brother. Let's be honest. If the games of the last cycle weren't play to earn, would you have played a lot of them? For me, no. Why? They suck as games. They were not visually stimulating. They were not interesting. And some of them were downright ugly, and the gameplay was absolute crap. It felt like playing with gaming consoles that were popular in the 90s. You know what? I don't know. I take that back. I remember there's some damn good games on my Nintendo, man. Damn good games. Zelda, man, that was a great game. Super Mario. Anyway, getting off topic here. I know it might feel a bit nostalgic, but if you've been spoiled with graphics using the Unreal 5 engine, then playing ugly games or nostalgic graphic games might not really be your forte. Fortunately for everybody out there, of course, the blockchain games of this cycle have evolved. They're now producing games that you wouldn't mind playing even if it doesn't pay you. Take, again, Off the Grid. Battle Royale game built on top of the Avalanche network. This thing is hot, man. This game from the guys over at the Gunzilla Labs uses the Unreal 5 engine to give very high quality graphics. They have Blomkamp helping with creative direction. Now, for comparison, Fortnite also uses the Unreal 5 engine. So if you love first-person shooting games, then keep an eye out for this one. Now, the token, by the way, is not out. You can play the game, but the token is not out yet. But it's coming out soon, okay? Early access for the game was officially launched in October, hit with a big splash. Players on Xbox and PlayStation 5 and PC got access to it. And look, if you're not much of a gamer, okay, then the success of this game is probably also going to bring a lot of new normies to the market, and which brings upside to the Avalanche network and really just upside to the whole crypto market space more broadly. Avalanche, of course, we discussed in the earlier part of the video. Now, this is the reason why we should always keep an eye on promising layer ones to see if gaming is not really your cup of tea. It's fine. But you still want to have exposure to blockchain gaming. Like, you don't like playing games, you understand other people do, and you want to benefit from them playing games, then ta-da. There's also other options out there too. For example, you might want to look into projects that focus on being sort of the platform where all of these games actually get built, or those that will help gamers or help the gaming developers and stuff like this. And you could check out, for example, the Carve protocol. Now, it's not your typical layer 1, layer 2 kind of thing, but it advertises itself as a modular data layer designed for gaming and artificial intelligence. And yeah, I hear the questions. What the hell is that, Lark? I get it. Look, basically, it is a decentralized identity and data layer that allows users, especially gamers, to securely and to privately control, share, manage, and monetize their data, okay? Now imagine that you're playing a game, okay? Normally your game data, stuff like achievements and scores, whatever, it's all stored by some kind of centralized gaming company. With Carve, this data actually all gets stored in a decentralized way. It's publicly accessible, meaning that you actually have control over it, not just the gaming company. So let's say that you're a top player in a popular game. Well, with Carve and their technology, you can actually prove all of your achievements verifiably and all your skills verifiably without having to rely on the game company. It's all on-chain, on your on-chain profile. You can also share your data with other games in order to get some kind of special rewards, or even sell your data off to advertisers who want to, of course, reach the top gamers like you. And that's all pretty neat if you ask me. Now, one last example here is ReadyGG, which is a Web3 gaming ecosystem that basically helps developers and players and creators to build and to monetize and to market games. By the way, both Carve and ReadyGG are working with like all the top gaming protocols in crypto, by the way. Anyway, do you remember when I said that rebrands can still be a good thing since people like new things? Well, ReadyGG has recently rebranded to Play. With the rebrand, they actually have introduced the Play Hub, which is a central platform that combines all of their tools and all of their services for game developers and for players, okay? Now, this includes software development kits for game development and NFT marketplaces and tools for monetizing in-game content. Now, we have to remember that narratives change every cycle. In the 2020, 2021 bull run, one of the biggest narratives, of course, was NFTs. Everybody was buying expensive images of monkeys in the hopes that they would increase in value, just like physical works of art. However, according to a study conducted by NFT Evening's 2024 report, 96% of NFTs are officially dead. And for those that are still alive, 4%, the price hasn't really recovered in almost every case. One example is when, for example, Justin Bieber bought a Bored Ape Yacht Club for a whopping $1.3 million in 2022, only to see the price fall all the way down to $59,000 in 2023. And that's one of the good ones. It's one of the good ones, guys. A lot of people bought $1 million NFTs that went to zero. Quick Google search right now will tell you that the floor price of this NFT, by the way, is around 20 ETH, so around $75,000. Now, it's the same deal with 100 more projects that tried to kill Ethereum and all the rest of the stuff. Right now, there are only a handful of anything from last cycle that's still thriving, let alone surviving. Just keep in mind that in the last cycle, we were all fascinated with the metaverse. When you go to buy, digital land, man, and cyber worlds. I'm buying sandbox land, Decentraland, man. It's gonna be cool. I'll make millions of dollars off my digital land. And some buyers did. Sandbox and AXS, Axie Infinity, gained 16,000%. Decentraland gained around 4,000%. Some of their lands went absolutely insane, but they were big. But do you hear them being talked about right now? I'm not saying that people won't talk about them again. They're still fine. Well, Sandbox and stuff, right? Not necessarily all of them, but they've been overshadowed by newer narratives. So if you're going to choose a narrative and stack some coins, you should be aware that narratives change over time. Except meme coins, they seem to always be here, and AI is probably not going anywhere anytime soon. And I know that sounds crazy, but I have no intention of overthinking it. When it comes to meme coins, you just can't mid-curve it, okay? And with AI, you just have to understand what's going on. And I couldn't tell you what to do with your money, but for me, I've learned not to marry any narrative. When the bear market comes, nothing will be spared. You get in, you take profit, you chill, waiting for the next narrative to come up. That's how you should approach this game. Don't be the guy left holding the bag at the end of the cycle. Trust me, been there, doesn't feel good, can't recommend it. Take your profits, sell, run away. Remember, take your profits, the market will take them for you. Thanks for watching.